and we'll see if I can get this going again. Test, test, test. That should be working now. All right. Microcap stocks. That's what I'm here to talk about. Don't ask me why my audio wasn't working, but there we go. I can fix that quickly now, eh? In old days, like 2 years ago, 3 years ago, when I started this channel, when I had an audio issue, game over. It was like live stream canceled, no idea how to fix it. Now it's not too bad. I wish some microcap stocks were a little bit more like that, right? A little easier to fix when there's problems, but I mean, what can we do? We take the good and the bad, and we do our best to find the best ones. And the month of May was pretty good for finding some good microcap stocks, right? Like we had NTG, Clarity Networks, and Zoomed were both up 68% in the month of May. That's absolutely incredible. And that's why you get into microcap stocks. I absolutely love it. So as usual, I've got a presentation here for you today. It's not actually a presentation this week so much as I'm going to talk about 6 or 7 different stocks. So this one is a little bit more loose. Normally I got a pretty structured live stream for you, and today I don't. I don't know why people didn't like it, but Sabio's earnings was really great. Yeah, we'll talk about that one in a bit here for sure. Sabio is part of my little presentation. As usual, so you understand a little bit about me. Typically, well, I'm a microcap investor, right? I tend to build a thesis, buy a small spec position in microcap stocks pretty early if I can, before anybody else or many other people have discovered them. And then I tend to evaluate inputs. And every time I evaluate an input, I evaluate my thesis, decide if my thesis is correct, wrong, if it needs to be changed, or is just completely out the window. And then based on every input and evaluating my thesis, I decide if I want to buy, trim, or sell that stock. So that's just a little bit about me as a microcap investor. And I am going to talk about some stocks today. So don't forget, not a financial advisor, definitely not your financial advisor. I don't know anything about you. Like I'm the one guy that when I say not financial advice, I really mean not financial advice. I don't put this on a video like as just a disclaimer. Even if I didn't have to do it, I'd talk about it because everybody's different. Your risk tolerance is different. Your education level is different. I have articles out there on Substack talking about, are you a large capital investor or a small capital investor? And there's huge differences in how you might want to invest in microcap stocks depending on how much money you're working with and how much risk you're willing to put up with. So it's definitely, I like opening up this communication so we can exchange ideas, so people can learn if you're a new investor or new to microcap stocks. But yeah, I don't give any solicitation to buy, hold, or sell a stock in these videos. That's not what I do. Hash. Any Hash shareholders out there? How's everybody doing? I've actually got Hash on the background here. That's simply solventless. Everybody is waiting for their Q1 and their Q4 to both be released, right? And because of the recent problems that have been going on with Hash, you know, 52-week high of 84 cents Canadian, now sitting at 43.5 cents. It's amazing with microcap stocks. I always talk about this, you know, potentially a stop loss in certain places if you're not willing to put up with the risk. Other people will be buying down here, looking at this this issue with Canby as a buying opportunity. But it's amazing the volatility within microcap stocks, because if somebody bought, like people buying microcap stocks, it's usually not institutions. So somebody bought simply solventless concentrates at 84 cents Canadian back in January. Right now from 43.5 cents, it'd be about a 95% gain, basically a double just to break even. That's absolutely amazing, right? But not saying that's a bad thing. Volatility is opportunity sometimes. Now, the bear case for Hash, simply solventless concentrates, you know, I wrote it out all out here, the timeline, as far as, you know, closing the acquisition of Delta 9 and then their acquisition of Canby. It's basically been a lot of drama. The main thing for us right now is we are waiting in their 2024 earnings. And one of the things right now, like what we're waiting for, is they announced a further delay in filing earnings until on or before June 2nd. They have about 2 hours and 23 minutes before it's not June 2nd anymore, right? So yeah, definitely a lot of shareholders waiting on that report for Hash, right? Down 34% on Hash was 75 cents percent per, or 0.75% position. I'm not buying too much drama. Yeah, people get scared away from this drama. One thing to remember too with Hash is that as of now, I believe their Q1 earnings are also late. So even if they announce their full year audited earnings, they still have to report Q1, I believe, right? I have to go double check those dates, but according to that reporting period, you know, when these companies file their Q4 earnings late, and then guess what? Q1 is supposed to come up pretty quickly after that. And when it doesn't, you're now late for Q4 and full year earnings as well as Q1. So a lot of drama there. The bull case, a lot of what people are looking at here that I try to remind people, especially with Simply Solventless, is if you look at my article summarizing the month of May, basically what happened is both NTG Clarity Networks and Zoom provided guidance. They provided Q1 guidance. They told the market what they were going to get. They achieved that guidance and they still went up 68% in the month. That was after reporting their guidance. They went up 68%. So, you know, this is some of the leverage we have with microcap stocks where people are either not paying attention, they don't trust it for whatever reason. You know, a lot of microcap investors, it's this isn't their day job, they're at work, you know, and a company could put out guidance, you forget, and you sell a stock and it goes down, and then all of a sudden they achieve guidance and they go up significantly. And that happened in the month of May for both NTG and for Zoom. Don't forget that, you know, Simply Solventless provided guidance. They did. They provided guidance, annualized gross revenue of $50 million, annualized adjusted EBITDA of $13.2 million, and annualized normalized net income of $12 million. So are we in another one of these situations? Geez, I hope so. I really do. I mean, going up 68% still wouldn't make that person who bought at 84 cents whole. That's still not enough for them to break even. But I think a lot of other hash investors, if it went up 68%, they would be happy, right? It's a lot better than where hash is right now. But that is kind of the bear case, or sorry, the bull case for hash, is that they have provided guidance, assuming that these earnings come in and there is no adverse material change that everybody's waiting for and earnings look good, then potentially I do have to wonder a little bit if, you know, they could follow NTG and Zoomed. I doubt they follow NTG and Zoomed up, you know, 68%. I highly doubt that because NTG and Zoom, neither of those companies really had this much drama surrounding the stock. But it might be nice to see them going up, right? I'm right for Q1. Thanks. Yeah, I thought I was writing out this presentation. I was like, they're late for Q1, aren't they? Yeah, it's you forget about the Q1 after the Q4. So right now, Hash is late with their full year 2024 earnings as well as the Q1. Sabio Holdings, somebody already mentioned that. Sabio Holdings right now about 51 cents. They just released, you know, earnings, and they were at about 58 cents or so right here. Earnings were pretty good. Share price is down. I think that's pretty natural. One of the things I'd like to point out that Sabio is doing very well for a tiny little $25 million market cap company in Canada, right? They have these reports coming out through Atrium Research. Very good reports, lots of good information. And if you actually go on YouTube right now, Radius Research really has been interviewing some of the stocks on my channel recently in the past, 6 months or so. One of the stocks they just interviewed was Sabio Holdings. That was just a few days ago. This Radius Research is a very good interviewer. Absolutely fantastic interviews. Really enjoyed this one. So good work to them, and really enjoy those interviews. And then this report from Atrium based off, they were also at this interview and were able to ask questions, are able to speak to the company, put out this report for Sabio Holdings, keeping this $1 12-month price target, as well as putting together some pretty good expected numbers, even a little bit conservative numbers here in my mind. And that's not bad, right? So one of the things, though, that I think Sabio is doing very well here is communicating with shareholders and investors who haven't bought yet. Some of the opportunity, looking at the valuation, understanding how challenging 2025 will be because it's not an election year. Normally, election years are big revenue years, yet still they had 43% growth in Q1. That's pretty darn good, but it helps explains why these valuation numbers kind of fluctuate from year to year. 2026 is expected to be a really big year for Sabio, and that somebody asked about why the share price has gone down after these earnings. I think some of these microcap investors just get a little bit bored waiting for a stock like Sabio Holdings when really the big year coming up is probably going to be 2025. They're doing great in 2025. Sorry, the big year is 2026. They're doing great in 2025, just keeping up with last year, which was really good. But the big year is 2026, and some people don't like waiting around that much. But the main thing for me, for such a small company, really put some eyeballs on the stock today and the past couple days with this interview and then with Atrium Research. And I love that communication with shareholders. It gets me watching the stock again. It gets me interested in the stock again. And if, that works for me, I'm assuming it's working for some other investors. Just a shout out here to Atrium Research as well. They just put out another report on Dynacor Group. I like this stock. This is a gold stock. It doesn't mine for gold. It actually processes gold. And, it's been down recently. And I've been looking at kind of that opportunity there. It's made one of my lists in my Discord. I think just my potential list, not my top stocks list. But despite the drama, I do like Dynacor. And Atrium does a good job of talking about why they reported sales a little bit lower than expected. Basically, they had a gold pour that was postponed until early May. So it shouldn't affect this quarter's earnings. Still, this company is doing well in my mind, and it's a good report from Atrium. I'll put both of those reports down below in my pinned comment, so you can go check them out after this live stream. So that's Dynacor. Glow. Anne-Marie asked about Glow. So yeah, already in my presentation, beat you to it. 6 cents. Recently was, kind of been sitting at 5 cents here for a while. I know a lot of people that were able to buy it at 5 cents. Recently it dipped a bit there, but mostly it's been trading a little bit higher than that, 6 cents and higher. Right now it's a $9 million market cap Canadian company. And that's something to keep in mind when you take a look at their numbers. So Microcap, tiny little company, Microcap. Just another good quarter, right? And solidly on track. It's not really outperforming expectations because, you look at this net revenue of $478,000 annualized. That's going to be less than $2 million. They're a $9 million market cap company. So right now they're still, 4 or 5 times sales. So valuation is still a little high, but with quarters like this, I don't know that valuation is ever going to go down. We're just waiting for revenue and income to catch up with their valuation and then hopefully take off. But I mean, their Q1 delivered just right on track here, 238% increase year to year and 44% sequentially. That's why people are interested in the stock. Gross profit is not far behind with a 211% increase. Absolutely stunning, 66% gross margins. They're still losing on an adjusted EBITDA basis. However, it's very, very, very little. So if they can continue with another quarter like this, hopefully by Q2, they're break even. And then by Q3, they should be profitable, right? This is just a fantastic headline for Glow Life Tech as such a small company. You really need some patience though. Obviously, like I modeled this out. I showed my previous model. I did a model at 35% growth, slowing to about 30% growth over here. And I did this model, which was, hey, what the hell happens if they get 40% every quarter? Well, they did it again, right? They got more than 40% again this quarter. So I actually had predicted with 40% growth, they get 469,000 of revenue. They ended up getting 478,000. So this was my top line guidance or projection for Glow, and they still beat that, about $1.9 million annualized revenue. And if they continue at this pace, remember $9 million market cap, they're going to get there, early to mid 2026. So they're going to take some patience, but at that type of growth rate, not that much patience, right? We're talking about a year, and they should have up to about 9 million annualized revenue at this rate. I do like the drama this week, don't I? Another security suspended here. This is Snip Interactive. I believe it's trading in the US ticker, but not the Canadian ticker. This one's down 31% on the year. SPN.V for the Canadian ticker. I'm not going to look at their full year earnings. This was another one like Hash, like Simply Solventless. They were late with their full year earnings. They were late with their Q1. That's why the security is still halted, right? It's now been filed. They filed their full year earnings. This is now their Q1. You're looking at Q1 2025 for Snip Interactive. It's pretty good. It sucks that the security is suspended. They're going to lose a lot of interest. People won't invest in this stock when this type of thing happens. And so it would be nice for them to consistently start reporting revenue or earnings on time and get in there, put a really big focus on getting in next year's audited earnings in on time, and that will earn you some legit respect. But I mean, if we're looking at just Q1, I mean, this is a stock that was another turnaround story. They had declining revenue. They were changing into more of a high margin business. Well, this quarter, they just increased revenue by 37%, right? Compared to last year. They're finally starting to show growth. Gross margin was 60% compared to 54% last year. Really revenue growth and margin growth is what you want to see. Snip is getting it, right? Also, we just looked at Glow, and they're close to profitability, right? And Snip just hit EBITDA profitability, $0.3 million, up from, a loss of $6 million last year. So again, profitable. Bookings up 16% for Snip, 5.8 million cash, no debt. If it wasn't for this security halt producing cash flows generated by operating activities, 2.3 million, the highest quarterly amount in company's history. If it wasn't for this, a lot more people would be interested in this stock if it wasn't for this delayed earnings. All these numbers are in US, right? So this 6.4 million, roughly, that's about 25 million USD currency annualized, right? And Snip right now, halted, has a $21 million Canadian market cap and an 18 million USD market cap on the pink sheets. So you're looking at 25 million of US revenue annualized, profitable, with cash, no debt, producing more cash, and it's trading for, less than 1 times annualized revenue, significantly less than 1 times annualized revenue. So unfortunately, that's what happens when you have problems with filings. But hopefully they could build some trust throughout the year, and maybe they build some trust starting tomorrow, June 3rd. They're holding an earnings call. So I would suggest people go check that one out. These numbers are pretty good for Snipped, right? And it's interesting. We can almost, put all these stocks together, and I have, because, these are all stocks that I've covered on my channel. And Zoom Technologies right now, top notch, $124 million market cap Canadian. This is probably going to start getting some institutional interest, up 1,000% or whatever in the year, right? Savio Holdings interestingly enough, is up 100%. People are disappointed with that, up 100% in the year, right? When I first started covering it around 25 cents, it's still only, you see that step down, it's still only about $25 million market cap. So Zoom, obviously the leader here. This year I've got it competing against NTG Clarity Networks, which is $105 million market cap. Then we've got AdCore, right? These are all ad tech companies. It's only up about 6% this year, back down to about 25 cents Canadian, only a small little $15 million Canadian market cap. They have nearly $11 million of cash, right? And then now I just looked again at Snip Interactive, 21 million Canadian market cap and 37% growth, 5.8 million cash, no debt. I mean, all of these ad tech stocks deserve a little bit of attention still, in my mind. A lot of this share price is down because tariffs and Trump, the bad man, is, the ad spending is going to be down with a recession. Like, remember, that's what everybody, including myself, was asking questions about when Zoom was down here, was tariffs, ad spending decline, and other kind of Trump and economy related concerns. And Zoom said, no, we don't have any of that. We're fine right now. And that share price is just going up. I wonder if it's a matter of time somewhat before that happens to a stock like Sabio, right? So a lot of good ad tech names out there. Credit where credit is due. Atlas Engineered Products in the past year, like Snip, down 30%, 31%, getting a recent spike here on earnings. And that's great. It's great to see. And this is one company where, it's hard to never blame the company when earnings are bad. But I mean, this is one situation where between, Canadian housing prices and election, and nobody really seems to care what's happening with Canadian housing. Canadian housing is absolutely in the toilet. Nobody's been building houses. And because of that, Atlas is in a challenging macroeconomic market, to put it mildly, with headwinds, the strength of a hurricane, basically, is what's been going on. And it was down to, we're talking 73, 74 cents Canadian. Atlas has now kind of climbed back up to about 92 cents Canadian, and good on them. They've been working hard, right? This was their Q1. Anybody else surprised by that? I didn't expect 21% revenue growth out of Atlas in Q1. That was surprising. They increased their adjusted EBITDA by 137%. Still have to be careful, right? Operating loss improved, but because of the challenges, it's still not perfect. They're also trying to expand and grow their wall panel division. I really like this company. In the right market, Atlas would be doing stunning. It's just, it's a really challenging market. And this kind of scene from Rocky makes me think of Atlas right now, where congratulations, right? Terrible market, you're getting beat up, and just basically through hard work, you're putting in some 21% growth. I think that's pretty good. And then still cobbling together, some acquisitions to try to grow in this market and take advantage of other people's struggles. And this is a little acquisition that they just had recently, tiny, $1.5 million, as well as $850,000 for the land. So Atlas is doing everything they can. Share prices up a little bit recently and kind of stopped that long 1 year decline in share price. Looks to have finally been given a little bit of hope, right? Now Vertical Group. And this is a good one that I've been talking about recently for educating people is, don't forget as a microcap investor that when share price goes up, when market cap goes up, so do your expectations. And I almost see the reverse out of a lot of people. Like, share price goes up and people think problems are gone. It's nothing but, clear sailing for this stock, and to the moon it goes. And that's not necessarily the way it works, right? Share price goes up. All of a sudden, people like me get more critical of that, expect more out of the company, expect better numbers, take a look at the risk. Everything's on a risk versus reward profile. And when market cap goes up, I do demand more out of a company. And now Vertical still had a lot of risk. I was not interested in it at all when it went up to some of these prices. I think it went up to like 68 cents Canadian, right? And I was telling people, you're ignoring some of the risks. This company has done outstanding. Like, people thought it was going to go bankrupt here. It's been doing outstanding, just a fantastic job from their CEO, Sandeep, but it still had problems. Their Q1 was pretty good, right? It's hard to argue that. But, you can't just focus on the top line. It still had debt. It still had some risks. And people were just looking at some of these numbers that this stock was getting. Why I'm talking about them today is that even better than those Q1 numbers, which didn't really interest me, and you could see that even after Q1, the share price went down. So I think other people were thinking like me, because this company still had risk. This was probably more important for Now Vertical, in my mind, is they secured this 26 million USD in financing. And this basically is well, the CEO says it's transformational. I basically agree, saying it simplifies our capital structure by consolidating debt previously spread across multiple lenders into a single long-term facility with significantly improved terms. They can consolidate all their debt. They could potentially continue growing and acquiring some more companies in the future. They have flexibility again. They are at basically zero risk. Well, no stock is at zero risk of going bankrupt, but $26 million is a pretty large loan for a tiny company like Now Vertical. So they're kind of safe for a while. So while everybody was excited about, the Q1 and share price went down, I was more surprised that share price went down on this loan, because this really does reduce Now Vertical's risk significantly. And I'll be taking another look at the stock now that they have this $26 million to kind of play with, right? McCoy Global. This is one of my favorite success stories. And I mean, that says a lot considering, it's only up 91% in the year, right? When we have, we got Zoomed and NTG Clarity Networks and some other pretty significant stocks. I don't know why I like McCoy Global so much. They pay a dividend. I'm not really a fan of dividend stocks, so it's kind of nice owning a microcap stock that's going up and paying a little dividend. It's oil and gas services, so I like that. I didn't used to work with oil and gas, but I work near oil and gas. And I'm not an oil and gas investor. I'm a kind of investor that invests alongside oil and gas. So McCoy Global really kind of ticked a lot of my boxes, and seeing this, significant gain recently again, because, I introduced it, I think at around 240 or something like that to my channel, but they keep putting out this good news, right? Even today, right? Almost every couple days, I see McCoy Global putting out something talking about their tools and equipment, the sellers, and who's buying it. Really good social media performance on LinkedIn for McCoy Global. So if you're a shareholder or researching it, go take a look. Right here, they've been putting out these posts where some of their clients are actually posting about how happy they are with McCoy Global's products. So I just saw a post, I think today or yesterday, from Ian Castle talking about how most microcap investors don't research a company truly because they don't look at employee satisfaction and customer satisfaction. Ian Castle's basically saying that you should do that. Not enough people are doing that. And it's interesting, like right after I read Ian's post, I was thinking of McCoy, because they're putting out these posts saying, look at all of our clients that are happy with their products. Now, obviously, we need to go double check some of this work, but it definitely helps to see that, right? The other thing I'll say, why is share price of McCoy Global up so much recently? Starting to get some institutional interest. Keep in mind, I mean, even up here, 191% in the year, McCoy Global is still only a $100 million market cap company, 103 million there. So at that price, it's just starting to get some institutional interest. This is just last week, Monday to Friday. On Tuesday, they had this one block trade, only about 20 grand. Wednesday, they had one block trade, only about 10 grand. And then on Friday, guess what? They had an investor presentation last week. I believe it was Wednesday or Thursday. And then on Friday, they had a $102,000 block trade from Acumen at a price of $387. So Tuesday started with a block trade at $353, and the week ended with a block trade at $387. That was the largest dollar value yet, largest volume yet. So McCoy Global is starting to get some institutional interest, and that is absolutely fantastic, right? Some other stocks I'm not going to cover in full here today, right? Don't forget, I got a Substack. This is a free article. I summarized the month of May, part of what I'm talking about today. You know, I talk about Covalon Technologies in that article, BioRam and Kraken Robotics, and, you know, potentially some of the opportunities there. And some of the opportunities with some of these stocks right now is Donald Trump still. So Donald Trump has been creating an environment in microcap stocks that I like, because I like this volatility. I like that I can go to a stock like Zoom Technology and it's up significantly, right? I like that I can go to a stock like NTG Clarity Networks and it's up significantly. And yet I could find some of these stocks that are still beat up thanks to Trump, right? What we've been seeing a lot is contracts on hold, delayed, or paused, inventory issues, shipping problems, additional planning required before committing to a new contract. Let's wait and see what happens. We've been hearing that a lot in earnings reports as these companies are reporting some challenging kind of Q1 earnings and talking about how the back half of 2025 will be better. So we have these types of stocks that are going up and making people money. And then we've got some other stocks that are kind of going down, a little bit of short-term pain for long-term gain. But those provide some other opportunities where you can get a good company at a cheaper price. So go check out that article. I'm not going to talk about those too much here today because I am at 32 minutes. So I'm done my presentation. Now's your chance. Don't forget, like, subscribe if this interests you. If you want to learn about microcap stocks or talk about microcap stocks, I do this every week where I summarize a few of them out there. But now that the presentation's done, I will head on over to the comments, questions, and answers and see what everybody's talking about. What stocks you want to talk about today. Okay, let's see here. How's everybody doing on this Monday? Kind of flat. Gatekeeper, interesting. But that's a question up here. Gatekeeper keeps winning more and more business in the US, share price moving proper, and we are looking for security. TTC. Thoughts? Yeah, Gatekeeper's also had some attention from some YouTube channels that started pushing up the price. So be careful. We've seen this before with Gatekeeper where they went up to like 85 cents before the company was ready, and it dropped back down to 40 cents. And some of that was due to social media. I'm not going to say promotions, just people excited about Gatekeeper before the contracts were in yet. They have been winning contracts. Absolutely fantastic work by Gatekeeper, doing a better job of press releasing some of these contracts, communicating these contracts with shareholders and investors. Notice they've also been pointing out what recurring revenue or SaaS they're going to get out of every contract. Absolutely love that. Significant improvement from Gatekeeper. We are the thing with Gatekeeper is we are waiting on Toronto a little bit, a larger contract. Everybody's waiting on a larger contract because share price has gone up recently. A lot of people are betting on that larger contract being very close, and I hope it is. But if it isn't, EPS has been down. They still have some challenges. I hope they do well this year. I'm going to continue covering them, right? Had NTG, now Zoomed, and Sabio had to sell them all. That's not good. That's basically every stock that's been up 100% this year. So I hope you're okay. Made money on Hash. Looks like a good re-entry. Well, hopefully. We don't know yet. It's basically on pause. I haven't seen anything come in yet for Hash. Hopefully it does tonight. If it doesn't, there could be a full trade or, cease trade order, not just a management cease trade order. But if they get delayed again, I mean, I wonder if the security isn't halted. So I do hope that they get in their earnings. It might not be a re-entry point for anybody if the security gets halted. What about NewPath? Yeah, I saw that they actually NewPath Health actually broke through, didn't they? They had resistance at around 25 cents. NewPath Health is now at 28 cents. They've been on a good run. That is now also their 52-week high for NewPath. So congratulations. Like I profiled this stock at 17 cents Canadian. It's now up to 28 cents Canadian. You can go watch the YouTube video. They've been doing great. It's probably close to fairly valued for me, in my opinion, and we'll see what happens. I mean, there's always concerns for me right here at the tippy top because people will be waiting for some kind of pullback in share price before they buy again. But they've been doing a good job. I like the company. For me, it all becomes about price. At 28 cents, I'm not sure about them right now. Thoughts on Mind? I try not to think about Mind Technology. Mind Technology is a U.S. stock that I cover. I'll take a look here. Let's see here. There's Mind right now for you. And this is a stock that ran up to, this is where it should be, in my opinion, $10, $11 for Mind Technology. For me, this would be fair price. But you have to keep in mind, a lot of these stocks that are this volatile don't trade at fair price, right? Mind Technology was an epic disaster. They had preferred shares. They got rid of the preferred shares. Once they did, they started putting in really good earnings and a lot more flexibility, and share price rocketed up to where it should be at fair value. Then, right here in February, Donald Trump, started causing shit with tariffs, and it got crushed. And that's kind of where we're at right now. I still consider $6 crushed for Mind Technologies. That's something like 8 times income or something like that right now. It's below 10 times income for Mind Technologies at this price. That's ridiculous. My thoughts is I try not to think about them because they're growing, they're profitable, they have cash, they don't have debt, and they're doing a strategic shareholder review to determine whether they should be buying another company or selling their company to somebody else. And so when all those good things are happening, I kind of try to ignore the noise, right? I did trim up here, so I made some profits up here. I did buy some more shares down here, and I'm hoping it goes well for me. But right now, they got Q1 coming up on June 4th. Those numbers could be a little bit weak, but at the end of the day, I'm looking for, the full year 2025 earnings for Mind. I don't really care about quarter to quarter, as well as I'm wondering if they're going to have that, if they get bought out, right? If somebody buys them out, I'll be pretty happy. So I'm basically just trying to be patient on Mind Technologies, right? One thing I like about McCoy Global is they're picking up significant contracts like the 11 million smart TR we picked up, even while the energy sector is in a bit of a slump. Yeah, I love that about McCoy. The nice thing about McCoy Global is people worry about like oil prices and drilling and everything else, and that would be a factor. I mean, if we go on a super bull market for oil, it'd probably be a little bit better for McCoy Global. And if we get a super bear market for oil, it crashes for another 7 years. Of course, McCoy's going to have some challenges. But McCoy Global and their products are basically replacing manpower for oil and gas drillers. So whether we're in, as long as the market's okay, it's not tragically bad, then people are going to be using McCoy Global. And they've proven that because we now have, a $62 barrel of oil, which isn't great. And they just landed this $11 million smart contract with their new smart TR products. So, and we're expecting more to come. I think they're speaking to institutions. The share price is going up. I mean, sometimes us retail investors don't know anything, but I do know when a company speaks to institutional investors and share price goes up. right? They might know something that I don't, and it's a good combination. So yeah, I'm pretty bullish on McCoy Global. BioRem dollar cost averaging. Good for you. Yeah, it's BioRem's one that I just talked about. Starting to see signs of life, a little bit above $2. The question is for me is how patient are you? And that's why in some of my articles I talk about, making sure when you're investing in microcap stocks, are you a patient person? Are you trying to, buy on the cheap, but you're not willing to be patient and wait? Or can you buy and put a price target on a timeline? Like, hey, I'm going to wait 12 months and see what this company does. Because one of the things with Donald Trump, I've been talking about, this volatility is opportunity, but we don't know what Q2 is going to look like for a lot of these companies. Trump hasn't gone away yet. Tariffs are still here. China thing is heating up. Q1 has been pretty weak for a lot of these companies. A lot of these companies are saying Q3 and Q4 are going to be improved. Q2, is still a bit of a wild card, right? I have no idea what BioRem is going to do in Q2. I have no idea what Covalon is going to do in Q2. And that's for me is really the Trump factor still right now. So we're hoping these companies improve in the back half of 2025. If they do, man, they have backlog and buildup, so they will perform. But it is interesting that, the next 3 to 6 months are a bit of a wild card for some of these companies. Did I have a chance to check out Q1 results from Name Silo? Apologies as well, came in late. Any thoughts on the financial delays with Hash? I keep refreshing CEO. Yeah, I haven't looked specifically at Name Silo, not their Q1, but I don't know that I have to, right? I could tell you their Q1 without reading their Q1. Growth, producing cash, using that cash to invest in something else. It's done fantastic. Name Silo was introduced on my Discord at, 25 cents, 30 cents. It ran up to about $1.05 Canadian. It's pulled back to about 98 cents. And people are taking another look at this tiny company. It's a domain company. So they sell websites and, they have some churn, but it's highly recurring revenue and growing. So I love Name Silo. We'll see what they're going to do. I think the Q1 wasn't enough to move their share price because with Name Silo, they've gone up so quickly. And I'll show people here. They've gone up so quickly. Again, sometimes investors are left wondering what's next. Like, people made their money here. It's been going up steady. That's why I've said it's such a good stock. Now it's up at this price, $85 million market cap. And now it needs to consolidate. And so for it to go up, it needs to give us a reason to buy the share price higher. Otherwise, it's going to consolidate. Maybe we see a dip down, but I doubt it because they're so consistent in their numbers. But we probably do need to see some consolidation there. So I'm in no hurry to really take a look at Name Silo right now because they should probably sit and let their share price get caught up. As far as Hash, no idea. I don't really have thoughts about it because we don't know. I would be speculating. Like, this whole, even waiting for earnings. And if earnings came in right now and I read them out to you, I don't know necessarily what we would learn because I doubt we learn anything about what happened with the deal with Canby, right? I doubt, Canby accused Name Silo of some material adverse change. I doubt we find out what that is or if it exists in their earnings. I doubt, Simply Solventless is going to say like, hey, look at this red flag over here, right? So, earnings come out and I do feel like earnings will be this big catalyst for the stock, potentially if they're good, but they provided us guidance. I mean, as long as they're on that guidance, I don't see why the stock doesn't, continue growth from here. It's just that so much concern, so much drama recently. Some people don't like that. And then that drama, that material adverse change is then reinforced in people's minds. It's all a psychological game. buy these delayed earnings. You couldn't ask for worse timing to have delayed earnings than have a company say that, no, you're not allowed to acquire us because of this material adverse change, and now your filings are late, right? So you do have to wonder, and that's why I've been highlighting them. Simply Solventless is right now very much, it's almost like gambling, right? Because we don't know if there is anything wrong, if there isn't anything wrong, if we will find out if there's anything wrong or not. But if it turns out that there's nothing wrong and Hash just keeps doing what they're doing, then this is a big win for shareholders buying at these prices. The risk is if there is something wrong there, that they bought a company and something wasn't reported properly, and now we've got lawsuits and drama, then that's a problem. So it's very much a gamble right now on Hash, but it's not something I can control. So right now I'm just kind of wait and see and enjoy the ride. I listened to the CEO of NewPath, very impressed and like this company for the long term, slow and steady. Yeah, good for you. It is a good slow and steady company. I'm pretty bullish on the industry sector as far as privatizing healthcare. That's why I was bullish on VitalHub or Well Health Technologies, NewPath as well. I think I don't think, I know that Canada's healthcare system has been failing, is potentially just failed at this point. I know numerous people, just not numerous people. Let's put it another way. Everyone I know who's had a significant healthcare concern in Canada has, in one way or another, at some point along their treatment path, gone and paid for a private service, right? This is just happening now. It's our healthcare system is so bad that anybody who can pay for a private service and get a better, quicker service, they're doing it. And that's, something along the lines of NewPath. So I like it. Nothing's changed for me for Enterprise Group. That's they're down, right? They're up today. They're holding. They're up and down. They're holding about $1.60 or something, right? I've talked to people about this, and I'm happy to be wrong, but I've been right so far because I said I was bearish on Enterprise Group back up at these prices, and the reason is that McCoy Global is an oil and gas service company, but McCoy Global is diversified. United States, Saudi Arabia, a little bit in Canada, and their product is good. McCoy Global's product is good, whether oil and gas is doing well or not. There's some potential there for McCoy Global. The challenge with Enterprise Group is they're not diversified. They operate in Western Alberta and Northern British Columbia, Canada. They're very narrow in geographic region, and they sell Evolution Power Product systems, which I'm extremely bullish on. I think those systems are fantastic, but when companies aren't working, they're not using the systems. So a little bit more risk with Enterprise Group because you're getting some less diversity, less geographical diversity, less customer diversity than a company like McCoy Global. So I think this is fair. And you know what? Forest fires right now starting up. Is that going to slow oil and gas? Do they have a slow Q2? Do they have a slow Q3? Again, because they're concentrated in, the very far west of Western Canada, they have some risks that some other companies don't have. And I'm not changing my position on that. And that's always hard to say, but that's what you're going to get from my channel is that love the company, love management, love Des, spoke to Des plenty of times, great company, love their product. Timing matters, right? Timing matters. When you got a $60 barrel of oil and, a slowdown in oil and gas drilling in Western Canada, it's not necessarily their fault if they're slow for a little while, right? So that's where I'm at. And do I still stand by this? I'm not sure which one. I've answered a lot of questions. So BioRem said their main issue was they can't ship components fast enough. That's a good problem to have. I'm sure they'll figure it out. Yeah, that's why I put them in the affected by Trump category, right? Like, this isn't normal that you just can't get shipping. We saw it during COVID. We saw it during Trump. So a bit of a force in nature there. Whatever's going on. Hopefully they figure it out. But that is, when I talked about it in my article, that is one of those potential opportunities with some of these companies. If you could find a company that is a good company, nothing's changed with the company, BioRem, Atlas Engineered Products, and what's changed is the macroeconomic cycle. We're on a down cycle. They're having macroeconomic problems. It's not their fault. They're still the same good company underneath. For patient investors that are willing to wait out that macroeconomic cycle, shipping isn't going to stay shitty forever, hopefully, right? Like the law of averages says, Trump isn't going to last forever, right? He's got 3 years and 2 months or something like that left. So eventually these problems are going to go away. And right now we have some really good companies at really good prices because they're facing some challenges that they've never seen before and may never see again in the future, right? So yeah, we introduced Name Silo, I think, at around 27 cents. That was fantastic work, Scott. And appreciate your help on the research. Gross profit margins now up to 26%. Paul's investments are about to be bigger and better part. That's just it. And just keep in mind, CEOs, Paul Andreola is the greatest microcap investor in Canada, right? And that is the person. Now that Name Silo is producing cash, it will be Paul Andreola and his team that is deciding on where to put that cash. So you get, with Name Silo, you get a company that is growing, a growing domain business, producing cash. It's really high quality, and you get that cash going into the hands of, Canada's premier microcap investor who is investing that cash into ways to make more money for shareholders. So it's hard to find a better kind of combination of things there. Some people won't like it because they might not understand it. One of the problems with Name Silo is you do have to really research what's going on there. But start by researching the cash. And yes, good work, Scott. Absolutely. FMST has popped out. Too late or still worth getting in? No idea. FMST. Foremost Clean Energy. Never heard of them. So wouldn't be able to tell you. I've got more popped off than this, though. What is this? 380 to 420? Assuming that's the same FMST. Yeah, no idea. What does this company do? Emerging uranium and lithium exploration company in North America. Yeah, I don't invest in these. Never, ever. So I'm not. Do they even have revenue? Yeah, so no revenue. I don't invest in these types of stocks. Sorry. No experience in them. I'm not a speculator. I look at earnings. My channel, my investments are driven by earnings, and I can't work with that, right? And look, I've got a bunch of friends that invest in, oil and gas juniors and mining companies, and I outproduce all of them. So they've had challenges over the years, right? And I would rather a nice, predictable, look at Glow, 46% growth every quarter, 263% growth year over year, predictable quarter after quarter after quarter with a valuation metric I could put on it. That's my type of investment, not oil, not mining and chasing around uranium. I heard NewPath CEO say in the video that 80% of the stocks are basically in the hands of a handful of institutions and investors. Won't that hold share price down? No, not necessarily. When you have diamond hands, when you have good shareholders, when you have a large part of the float being held by stable people not willing to trade it, it usually creates, well, it always creates volatility in the share price, but it usually sends the share price higher than it should be. We have situations like Eddie's Smart Home Solutions, BQE Water, high valuations, volatile, and so that good shareholders, I've never really seen good shareholders hold the price of a stock back. It's usually a good thing. Is FTG still your favorite microcap company? Did I say that last week? I don't know that I've changed my mind in a week. That would be a little volatile. So, and look, it'll change because I'm human, And, what do I do on this channel? I introduce investors to one new stock every week. This year has been a little lumpy because I've also got a Substack. So my YouTube videos don't come out every week. I've got a video coming up that'll probably introduce 2 or 3 stocks to you. But basically what I do is introduce one stock per week. Do I change what I like every week? Not necessarily. That's why I have my lists. There's still good companies. Kraken Robotics is still the top of my list right now, right? But when we look at what they're doing, what their potential is for the future, what their current price is, what their current valuation is, I'm just looking for good companies. That's what I'm looking for. And FTG is definitely one of my top good companies that has a lot of potential for the future, right? So yes, it's still one of my favorite microcap companies. Absolutely. I sold VersaBank now. Wait for a cheaper re-entry price this summer, this fall. Good luck. It's interesting. Canadian VersaBank is a Canadian success story. It's a digital bank, very successful business model in Canada. It's gone from like $3 recently to like $20. It's now sitting at around $15 Canadian. It just entered the US market with an acquisition of a US bank. They got through all those regulatory hurdles so they could expand into the United States. And then they decided, we want to be a US company. And so that was great. And so they're going to keep the Canadian company as a subsidiary, and the American company is going to be the parent, and it's going to cost them about $8 million in 2025 to make that change. I thought share price would go up on that news with VersaBank announcing their move to the US, but that's hard to say because I don't know the last time I remember seeing this happen, that a company just fully switched from Canada to the US. So I thought there'd be a little bit more excitement on that news because they have a huge potential market in the United States. The problem is that VersaBank's still working through the costs of buying the company in the US. Now they have to work through all the costs of moving to the US. So there's going to be a lot of costs in 2025. And yeah, potentially the share price does go down. It's going down right now. So you're absolutely right. Still like the company, but yeah, it's sure getting a lot higher risk these days than it was before. Any thoughts on Zoom? Also, hope you had a good day. Thank you. What can we say about Zoomed? I mean, what can you say about the company here that I'm going to pull up? As far as expectations, right? So here's the thing is that my thoughts right now are I will be watching to see, we need execution quarter after quarter. We need to see Zoom continue to execute. Well, one of the things I'm watching for now too is institutional interest. 123 million Canadian market cap. That's pretty good size. That's going to catch some attention. They're going to show up on every screener in the world with their growth of both top line and bottom line earnings, and the market cap now at this price. Institutions have to be interested in that. So that's what I'm looking for. And I mean, I think that's what a lot of other people will be looking for. They can continue their growth and they're going to continue up. Are we going to see another, 1,200% 1 year growth? No. So I think a lot of retail investors will be looking at taking profit. I think what'll hold people back from that, because you notice it really hasn't dipped recently, right? A lot of other companies go up and you see this big dip, then they go up again. People are being pretty stubborn right now on Zoomed. And I think a lot of people are like me, where they're thinking institutional investors are next. And I wonder if that happens. A lot of people will say it's too high a risk, but you know what? NTG Clarity Network's been getting institutional interest. I don't see why Zoomed can't get institutional interest. So I think that's what everybody's waiting for. I think everybody's being a little bit stubborn. I mean, if it does sell off, it's definitely worth another look. If it benches down to here, obviously we'll be looking at that as a risk reward profile, and whether it's a buy again, right? But I know a lot of people are stubbornly holding Zoom right now. And look, we're heading into the boring part of microcaps. So when we talk about these companies, I think people should be taking a look at, again, what they're willing to wait for, how patient they're willing to be, because Zoomed isn't going to just explode again, I doubt, right? It's now June, we've got July, we've got August, we got more Trump tweets, we got more, China-US trade, what's going to happen there? Canada-US trade, what's going to happen there? 90-day tariff pause is coming to an end at some point. I know I saw something that Trump said something about you better get in your best offer soon, so we have some time to look at it. So we could be sitting here in July and there's a new global trade war, right? And we see some weakness. So make sure you evaluate your position for the summer. Get ready for the summer. Get ready for some volatility, right? I could sneak in one more comment. Check out Cameron's Discord. Incredible value add, especially for paid members. Apologies, Cameron. I know you're not one for self-promotion, but great value thing. Really appreciate that, Scott. Thank you. Yes, I have a paid Patreon Discord. It's the best value I offer. I also have a Substack. Everything in my Substack is covered in my Patreon. And it's just some people don't like Discords because we're in there chatting all day. And if you don't like that type of high activity discussion about stocks, like once hash earnings get released, I'm sure I'll be in there commenting on the earnings, right? And some people love that, some people don't. So for people who do like, communication of stocks daily, I've got a Patreon Discord. I'll put the link for that down below in the channel. But basically, just go to Patreon, look up Common Sense Investing, as well as I have a Substack. Thanks, Scott. I don't promote myself very well. I try not to. I don't know why. I recently started a small tranche. It might buy more if it dips. Yeah, good. I think you're talking about Zoomed, right? So a lot of people are just discovering it now, and I don't have the slide. I can't go to it. I should make it a standard for every presentation. But you have to look at the discovery process, right? And I talk to companies. I've been talking to a couple companies this week about it. Basically, the discovery process sometimes starts with me. I'm a very small platform, right? 4,000 people on YouTube, 3,000 people on Twitter, and my Discord and my Substack. I'm a small platform. And then you get discovery up through Small Cap Discoveries and Microcap Club, larger platforms. We're talking hundreds of microcap investors. 550 of them just showed up at Planet Microcap in Vegas. There'll probably be about 150 showing up in Vancouver for the Small Cap Discoveries conference here in September. And then you get discovery up from there into Keystone, into Pender Fund, into Rivmont, into these smaller institutions. And then after the smaller institutions, you have the larger institutions, right? Cormark, Beacon. And, so there's this discovery process that exists out there. It's interesting that when you take a stock like Zoomed, you have to be aware of where it is in the discovery process. And right now, Zoomed is discovered, here by small retail and small channels, kind of discovered here by some of your small cap discoveries in Microcap Club, right? So we got small retail here, Microcap Club, small cap discoveries here. Now we're hoping that the next phase of discovery comes into play and we start getting institutions interested. And so that's really for a tiny little stock like Zoomed. That's really the different levels you could see here of benching up through retail investors buying, larger platforms buying, it benches up again. Now we get larger investors buying, and can we get institutions? If we can get institutions, that's kind of the next bench up for Zoom Technologies. And understanding where a company is in that discovery cycle is pretty darn important. So one of the reasons why I'll bring that up and say that is for people to be careful, because we talk about this a lot. I think one of the worst things people do is sell too early, where I've talked about before, if stock microcap investing isn't necessarily about stock picking. It's actually about only about 20% stock picking. You can go on Yahoo every day and find stocks that are up 20%, 30%. You can go find all kinds of stocks that are up 100% in a year, 200% in a year. It's about buying at the right time and selling at the right time, or holding if you're that type of investor, right? And I know that because when you look at a stock like NTG Clarity Networks, I know, and I talk about this a lot, I know people are sick of me, but I know a lot of people that sold 100% of their position right here, right? And this is when they doubled their money. They bought around 20 cents and they sold a little over 40 cents, and everybody went and had a cheer session because they made 100% returns. And that's fantastic, right? But as we move through discovery with NTG Clarity Networks, you know, they were discovered by Keystone, Small Cap Discoveries here, Keystone Financial here, somebody else, Microcap Club here, and then finally discovered by Jordan Zinberg at Bedford Park Capital here. So their share price going up was all the different discovery levels, and that's what we're hoping for Zoomed, is to get that last push that NTG Clarity Networks got here from larger institutions, right? But yeah, it's so much of it involves, you know, not only finding a good company, finding a good stock, but understanding that discovery process and understanding when you should buy and when you should sell stock is just so important. And it's not really black or white. It can't be like taught by a book kind of thing. You kind of got to read 100 different investing books and pick the strategy that works best for you. I got Zoomed during your highlight of it after the Planet Microcap. That's great, because if you got it on my Substack article, you got it for around 45 cents Canadian. So you've done well. I enjoyed your article on Pico caps very much. Need to read and ponder over each company the way you did. Thank you. Appreciate it. I don't talk about too many tiny companies on here, but just because you don't want to be like accused of like a pump and dump. If one of my videos like pushes the price of a stock up, I don't really like that. That's not the intention of my channel. But there are some pretty good tiny little companies out there that I do highlight. And I did recently put out a paid article talking about some tiny little Pico cap stocks that I'm watching. And some of those have some real good potential. And keep in mind, like, you know, I know some larger investors are like, well, I need a stock to be a certain size. Zoomed at one point was 8 cents. It's now $1.25. NTG Clarity Networks was once 15 cents, 3 cents, went through a reverse split to 15 cents. Now it's $2.50, right? Some of these companies start off at this, 8 cent, 5, 6, 7, 8 cent level. And it's really, as a retail investor, this is really some of our opportunities to make the most amount of money that larger investors can't get into, institutional investors can't get into, because you're looking at a $9 million market cap stock that's trading, $2,000 worth of shares per day, and only small retail investors can buy that, and that is our advantage. A lot of risk in that, but when you get it right, boy, you sure make a lot of money. So congratulations to people that bought Zoomed at 8 cents. I think I introduced it around 15, 16, 17 cents, but it had doubled. By the time I was introduced to Zoomed, it had already doubled. And a lot of people at that time were like, I'm out, I'm selling, because I doubled my money. And now it's up like 1,800% or something ridiculous like that. So congratulations to people that bought it there. Questions are done. Comments are done. I'm an hour and 9 minutes into this thing. It looks like I am done. So thank you, everybody. Another wonderful live stream. Really appreciate it. We got another week of investing in front of us. Should get pretty boring here as we go into June. I hope it gets boring. I hope it gets boring. Could use a little bit of time off. And hopefully, Simply Solventless reports their earnings. That would be my happiness for Tuesday. And good luck to all those shareholders. Thank you for watching. Really appreciate it. I'll see you again in a week.